I do think this is a quiver in watches of a bow in watches of Switzerland's quiver, and here
an arrow
and whatever, a bow, an arrow in there,
an arrow in the boot of.
This is a special episode of Open Work, a look inside the watch industry, a podcast from Collective Horology. I'm Gabe Riley, co-founder of Collective.
And I'm Asher Rapkin, co-founder of Collective.
Collective Horology is an independent watch retailer based in Southern California. We carry a wide range of independent brands, including Arcanaut, Singer Reimagined, James Lamb, and more. To learn more about us and check out our available inventory, visit collectivehorology.com.
Before we get into today's topic, we need to make a correction from last week's episode on the movement industry. We misspoke when we characterized that Chapek's SXH5 movement was produced by Chronote. In fact, it is wholly produced and finished and assembled in-house by Chapek. Everyone makes mistakes, but it's important to take credit for them, so we apologize for misspeaking there. And now, on to the episode. Today, October 4th, marks a major shift in the watch industry. Hodinkee, the founding father of modern watch media, has been fully acquired by Watches of Switzerland, a massive UK-based retailer who only made their debut in the United States in the last 10 years. Only a few months ago, Ben Clymer, founder of Hodinkee and as of today, a president at Watches of Switzerland, said that Hodinkee was shuttering their retail business and going back to focus on, quote, the basics, which they defined as their editorial. We discussed this extensively on episode 15 of Open Work, and today Gabe and I are going to discuss the importance and implications of this significant change in the watch world.
Let's go back to that last episode, episode 15, and if you haven't listened to that, check it out. But I think it's probably worth starting with what has happened between then and now. And I think the biggest thing that has happened is, of course, what you described, which is this declaration that Hodinkee was refocusing on sort of their basics or their roots. But under the hood, from the operations standpoint of the business, they went into what appeared to be kind of like a liquidation of their inventory, in particular, their new and pre-owned watches. So both Hodinkee and Crown and Caliber, both on pre-owned and on a lot of new watches, marked down prices significantly. I was on there the other day. I love Ute NATO straps, formerly known as Toxic NATOs, and I was looking for some. Those straps, for instance, were marked down to $1. And they sold out, of course. They're excellent straps at any price, but certainly at $1. So I was a bit bummed I missed out on that. But really quite an aggressive liquidation of their inventory, which to me suggests that there may have been a timeline against which they were working. In fact, I was on Crown and Caliber the other week, and on the homepage of the site, by the way, if you go to Crown and Caliber now, there is literally not a single watch available for purchase. The domain is up, the site is up, but there is no inventory. And I was on Crown and Caliber, and the homepage banner said final week. So look, I could be reading the tea leaves. I don't have any inside information on this, but it would seem based on those signs that there was a timeline against which they were working to move out of that retail business and out of that inventory.
I mean, I think we have to realistically assume that there was a timeline. Watches of Switzerland is a publicly traded company in the United Kingdom. I am certainly not an expert in UK law or business regulation, but I have to fathom that this was a deal that was in discussion, or at least in contemplation, for longer than the period of time between when that letter came out and today's announcement. So it also would make sense. I mean, if we assume that Hodinkee has been hemorrhaging cash, which I think is a reasonable assumption based on their layoffs, et cetera, and the changes in the business over the last few years, then creating some liquidity may have, and correct me if I'm wrong here, but I suspect would have helped them during this deal, certainly as they were figuring out the financial structure of it. And we'll get into some discussion of some ways that might have come to be. But I have to imagine that was part of it. And it's interesting too, because it also repositioned, at least, or was attempting to reposition Hodinkee in the way that I think Watches of Switzerland would have wanted to acquire them. Because if you think about it, there's really two ways that Watches of Switzerland, if we're assuming that Hodinkee is going to operate as Hodinkee has operated, there's really two ways that Watches of Switzerland could have seen the acquisition. One would have been of a modern, so to speak, online retailer.
So similar to their acquisition of like Analog Shift.
Yeah, exactly. So why did they buy Analog Shift? They wanted into that market, right? So
vintage and pre-owned.
Exactly.
In that case. Yep.
So they were essentially acquiring something that would have been harder for them to build on their own, plus the brand equity of Analog Shift. And presumably, I think you could have said that they were doing that from a retail angle with Hodinkee. Clearly, that's not what they were doing because Hodinkee closed that before the acquisition.
It certainly simplifies the bookkeeping if they get we talked a lot about this. If you get those assets off of your books, clean that piece of your business up, and then there's a more discrete part of the business for Watches of Switzerland to acquire, which is what you're getting at.
Which is the editorial side, right? But this goes back to what I think is the core question for me. And we discussed this earlier on the pod, but it's even more important now. We discussed the reality from our former lives as media people about what would be required to monetize and generate significant revenue from Hodinkee as a purely editorial play if they stuck within the content model that they currently have, which is to say long form video and written editorial articles. And we discussed that the math of that doesn't add up in a way where the business would have been sustainable with the number of employees they have, the physical space that they occupy, et cetera.
So now we have an answer to that question. That was the single biggest question we had in that pod is, this is interesting news in many ways, like a return to form is encouraging, but how on earth are they going to fashion that into a sustainable business?
Well, we do, but here's my open question, and I'm curious your point of view on this. I see this as, and I put myself like in a corporate boardroom setting, right? Remember those?
I've tried to block that from memory.
Exactly. Some cleverly named corporate room at Watches of Switzerland's like, I'll meet you in the escapement room. We'll edit that out. Anyway.
No, we're going to keep that in.
Oh, great. Anyway, you can imagine people sitting in a boardroom and they're looking at the competitive landscape and they're saying 1916 company has done a bang up job of creating editorial which services the needs of them as a retailer. We, Watches of Switzerland, probably see that as a strategic advantage that our competitor has, and we can probably try to counteract that by acquiring a company like Hodinkee. Now, at the surface level, that makes a lot of sense, actually. I think it's very clever. Like we can quibble around the edges, so to speak, around brand equity. And we should talk about brand equity because that's a huge part of this. But let's assume for a minute brand equity is positive and that makes sense. It still, to me, has a major flaw in the strategy. And I preface by saying, I don't know what the strategy will be moving forward, but let's assume
we don't know what the strategy of the acquisition was. We're guessing
exactly.
Here.
But let's assume for a moment that it was because Watches of Switzerland believes that editorial will fundamentally help them increase their market share and retention. It still doesn't fix the problem that the editorial structure of Hodinkee, which is focused very much on, as we said a moment ago, long form video and traditional written articles, is not in the form of modern media, which is decentralized, short form, and the rest. So
that's a fair criticism, but I think there's a more fundamental criticism. When I think about the retailers who have done a good job with editorial, or at least seem to have, and have clearly made editorial and online content a key part of their business. You mentioned 1916 Company, Teddy Baldessere is another example. Bob's Watches does a lot of content, for instance.
Collected Man.
Or A Collected Man is a great example. Those retailers and their editorial content shared the same brand. They're one and the same. And so I think what people seem to react better to with the 1916 Company is it's very clear that the content is coming from a retailer.
Yeah, I guess it's not Tim Mosso powered by the 1916 Company.
Yeah, and he even says, in his famous hands-on videos, like, get in touch to buy this watch, right? Yeah. There's no pretext to it. It's very clear what it is. And, people, of course, are smart. They consider the source. But if the content is good, which in the case of the folks we mentioned, it really is, then, it's like, okay, that's a bargain and they're willing to make. We do the same thing, too. This podcast is an example of that. And we're very clear up front. We don't just say, like, we're a retailer to advertise a retailer business. It's also an act of transparency. And we do that in all the content we create. The challenge with the Hodinkee and Watches of Switzerland model I see is really a brand challenge, which is they're trying to have their cake and eat it too, which is to say Watches of Switzerland and the companies which compose it are watch retailers. And they have the Watches of Switzerland brand or the brands of those retailers. Now, in the case of Hodinkee, presumably they're going to maintain the Hodinkee brand. And they're going to continue to do what Hodinkee does, which is produce content around watches and editorial content. And to me, it's like, once again, we're back in the situation that Hodinkee sort of struggled with, which is this editorial? Is this commercial? You're telling me it's editorial. It's backed by commercial. It's a bit too muddled. And I think they're trying to have it both ways, which is to have an online editorial arm of their retail business, while also trying to position Hodinkee as an editorial product. And I think we're back to the challenge we were with Hodinkee a few months ago.
Well, yes, I think the other side of that is that challenge is now a double-sided blade, right? Because you think about it, if Hodinkee is an independent editorial entity, whether clients, whether readers were looking at it as independent was one thing, but the industry still viewed it essentially as a news outlet. And if there were going to be releases, if there was going to be partnership opportunity, et cetera, like that was plausible because it was an independent outlet. Now it is wholly owned by Watches of Switzerland, which means that anything that Hodinkee does, whether, fair or otherwise, will be viewed through the lens of the commercial relationship with Watches of Switzerland, which is a really interesting take, because now it's not just the client who's saying, I don't know if this is a commercial or editorial endeavor that I'm reading here. It's also going to be perceived from the industry side as, am I doing this as part of my greater deal with Watches of Switzerland? Is this part of my marketing? Is this part of my cooperative marketing budget? Like, what am I doing here versus the independence that was previously there? It also brings up some other interesting questions. Are they going to now abandon what revenue was plausible from advertising because of this acquisition?
That's a good question.
Because it wasn't enough money to operate, to run the company there, but it is money. I mean, there's millions of dollars there.
There is a model for that. Amazon does this. This is done in traditional retail. Walmart makes a lot of money off of this. There are sort of advertising and merchandising fees they can charge. So presumably, this is like the famous example of this is the end cap at the grocery store. Around Super Bowl time, when you see the big display of Frito-Lay products and Pepsi products, all Super Bowl themed or whatever it might be, like the retailer, the grocer, isn't doing that out of the kindness of their heart. They're essentially charging a fee to the brand to have that there. It's a form of advertising. Now, you could say part of what Watches of Switzerland may do is it's called shopper marketing. They may have use Hodinkee as a form of shopper marketing. So as part of a deal with a brand, they may say, in addition to whatever terms they negotiate, you're also going to get, X amount of advertising, display advertising on Hodinkee, or partnership advertising, or whatever it is. So it's another form of monetization. So they could build it as like a co-op budget. They could monetize it. It could be credits on invoices they're getting from these brands, but it does become this sort of shopper marketing inventory that they can now sell to the brands with whom they work.
But my question is that additive, or is it just cannibalizing existing cooperative marketing? So for example, let's say, I'll play devil's advocate here. Let's say I am watch brand X that is retailed in every location of Watches of Switzerland. Okay. presumably there is some form of cooperative marketing budget that's tied to that has money for search advertising, for billboards, for events, things like that so it's essentially just a shared cost.
And just on terms here real quick, co-op marketing is generally between a retailer and a brand, and this could be any industry. The brand will tell the retailer, if you spend a certain amount of money on advertising, we will reimburse you in part for that. So the famous example is when you're driving through your local city, town, whatever, and you see the Rolex billboard with your local authorized dealer's name and logo on there. That's co-op advertising. The dealer and Rolex are sharing the cost for that. And I don't know how exactly it works, but the brand...
Well, it varies by brand.
It varies by brand, but in some way, shape, or form, whether they're paying them or they're giving them a credit on an invoice or who knows, there's some form of compensation that goes from the brand to the retailer for doing that advertising on their behalf. That's what we're talking about here.
So if I put myself into this scenario, I see two things happening. The marketing team at Watches of Switzerland is going to go to brand X and say, we have this incredible opportunity now. We can give you the platinum package in cooperative marketing where, we have our agreed upon terms. Then for an additive, however much in money, you'll get to run a spread in Hodinkee, or you'll get advertising on Hodinkee, etc. But if I were the brand, I'd say, I don't think that's additive. I think that's not just part of your company. So I'm just going to go ahead and say you should just provide that anyway.
I don't think that's true or fair. I mean, this is standard fare in retail. I mean, Amazon has a multi-billion-dollar advertising business that's essentially a shopper marketing business where the brands who sell on Amazon are paying them fees for advertising. I don't think
Amazon is a fair example, man. Amazon is an example of itself.
It's not. No, but Amazon is an example. Amazon crimped that model from Walmart, who cribbed that model.
But again,
who cribbed that model from grocers, who cribbed that model from... So my point is this is... Shopper marketing is an institutionalized practice in retail across industries, and this gives Watches of Switzerland the ability to do it. But we can debate that. I do think there's an interesting point, which is let's say for arguments, the purpose of arguments here, let's just take that off the table.
Okay,
I do think this is an important competitive advantage for Watches of Switzerland, and here's why. The same way having an amazing retail space in an incredible location is very appealing to a brand they want to pick up and add to their store or keep in their store. Having Hodinkee as a digital property is likewise a real advantage for them and something they can use as leverage. So all of a sudden now, I think one of the macro questions in the industry has been, since Rolex acquired Bucherer, is, what does this mean for other big retailers? For instance, a big driver we know of Watches of Switzerland's sales and profitability, we know this because we talked about their last annual report, is Rolex. Now, all of a sudden, they own Hodinkee, and Hodinkee obviously does great service for Rolex and for Tudor. So now, all of a sudden, Watches of Switzerland has another form of leverage with the brands they carry. They don't just have amazing retail locations and frontage and sales staff and a book of business. And we should talk about the book of business and the client list in a second.
Yeah.
Now they also have Hodinkee, and the brands who they carry, or potentially other brands, may take another look at Watches of Switzerland and having Watches of Switzerland carry them, knowing that within their portfolio, Watches of Switzerland has Hodinkee and all of the influence that Hodinkee has. Now, that means that Hodinkee needs to continue the quality of their content and their influence, and that, of course, remains a question mark. Not just because of this, it always remains a question mark for any business. Things change. But I do think whether they monetize it or not in the form of shopper marketing, just adding Hodinkee to their family of brands is an important point of leverage for Watches of Switzerland with the watch industry.
Okay, so let's break this into a couple of buckets, right? So one we just talked about is this presumption that Watches of Switzerland is buying Hodinkee because it will become the editorial wing of Watches of Switzerland. Totally reasonable take. If we pivot over, a friend of ours pointed out to us today that a significant component and value may very well be the client list. And that got me thinking, maybe that's not what they see. Or maybe that's not entirely what they see when they look at Hodinkee
And you mean Hodinkee presumably has a list of clients of people who have bought watches from them.
Yeah. But let's
which is valuable to Watches of Switzerland, who is a relatively new entrant to the US watch market.
It is, but I think, as anyone who has ever picked up the phone to call someone knows, like, just because you have a name and a phone number, that doesn't necessarily lead to revenue. Especially because it really also depends on how that person feels about how you got that name and phone number. But putting all that aside for a moment, there is another element of Hodinkee, which has sort of gone to the wayside post-pandemic, but was very integral to their strategy prior to 2020. And in fact, was what they were trying to do with retail, which was to completely change the physical retail landscape and focus on what at the time for them in 2019 was a deeply, deeply engaged community that associated very positively with the Hodinkee brand and what it stood for. And I mean, remember there was a point where like a Hodinkee strap was fundamentally cool because you got it from Hodinkee, which makes me wonder if part of the reason that they decided to acquire the company wasn't necessarily just editorial, but was about consumer experience. Recognize, maybe I'm giving someone some ideas here, or maybe I'm just spitballing, but I could see a world where Watches of Switzerland views Hodinkee and that brand as their version of the Amex Centurion card. Let me explain. For so long, the Hodinkee limited editions, for example, I realize the collaborative market has evolved dramatically, but bear with me on this one. Hodinkee limited editions were highly desirable. If Hodinkee touched something prior to 2020, 2021, it instantaneously turned to gold. Like, the brand had massive equity in terms of perception, and its endorsement carried weight.
And let's be clear, it still does. Part of the only reason we're recording a podcast like this, well, first of all, the last podcast we recorded on this topic was one of our most listened to podcasts ever. Mm-hmm. Part of the reason we feel that there's some urgency in recording this is because Hodinkee is still incredibly relevant.
Well, careful. I would differentiate between awareness and relevance. I think Hodinkee's awareness in the watch community is off the charts.
I also think there's a broader audience who are more casually into watches,
sure,
who are aware and familiar with Hodinkee, and maybe don't have as much of the perceptual nuance that.
So let's run with that assumption. Let's run with the assumption that the equity of the brand is fundamentally the value of this acquisition. In which case, there's the editorial side of it, and then there's essentially the endorsement side of it, and the client experience side,
which is the talent.
Yes, let's get to that in one moment. But I just want to finish this thought, right? Like, if Watches of Switzerland, decided that they wanted to, say, put a certain percentage of their clientele in an upper echelon, or if they wanted to host events or curate content or whatever, they can do all of that now under the Hodinkee name. Like, it's not a ridiculous thought.
That's really interesting,
right? Like if I were them, I would say, this is neat. What if, for example, my super high end clientele, like my best paddock guys, for example, and all of that, those folks were managed under the quote, like, Hodinkee group.
It's like Chase Private Client or something.
Yeah, exactly. Or what I was saying, like the Centurion Club. There was this idea that it almost makes, because Hodinkee was for many years an aspirational brand. I think if they really had the branding cojones to do it, that could be a potential value there that is actually way, way, way more profitable than articles.
Well, then it's slipping back into retail. I think another thing.
Yeah, but they got bought by a retailer.
Well, sure. But to go with the Centurion thing, like, all of a sudden you have a much more interesting angle and brand to put around things like watch meetups and events at your store.
Exactly my point. Exactly my point. So it gives them this ability. And by the way, this is something that 1916 company does not have. So, like, there is no, like Watchbox, 1916 company, Radcliffe, they're all on the same level.
They do use Tim Masso strategically as something of a personality and a draw for collector groups and appearances and things like that.
But that's an individual, not a brand.
Yeah.
And right? So, like, there's a difference, and no disrespect to Tim in that regard, but like,
I would go to any event Tim Masso is present
exactly.
at. I mean, an incredibly talented guy.
But I think the use of the Hodinkee brand to me is really the opportunity for Watches of Switzerland, not the output of Hodinkee as a media entity, which is not like the profitability of that is a drop in the bucket relative to the rest of the business. And we cannot ever forget in any context here, Watches of Switzerland exists to sell watches. So Hodinkee must serve that purpose for them. Like, no corporation is charitable. You know what I mean? Like, they didn't buy this as a favor. They bought it because they think it's going to make them more money.
Well, the same grizzled industry veteran you spoke to who floated the idea of the client list. And by the way, to what extent it's valuable, we can debate. I think there's some value in Hodinkee's client list.
Sure, but the question is, like, when you call them up, what are you offering them?
Sure. Well, let's put that aside.
Yeah.
The other thing he mentioned to you, the way he saw this acquisition, and of course, everyone votes from where they sit. So, this person's perspective on the acquisition was guided by his role in the industry and his experience in the industry, same as ours. But his other point, which I thought was really interesting, is this is what they call acqui-hires, right? He's like, essentially, like, this is a talent acquisition. And we do know from Ben Clymer's article about this that you mentioned, he's staying on at Hodinkee. He will be there full time. He will be the president of Hodinkee within Watches and Wonders.
Watches of Switzerland.
Sorry, Watches of Switzerland. This is common with these kinds of acquisitions with founder-driven brands where founders are not even asked, but they,
as part of the deal, are required.
As part of the deal, they sign an agreement saying they will stay at the new company or the company to which they're joining for a certain period of time. So, part of it may be his excitement and something he's doing out of his enthusiasm for this new chapter of Hodinkee, but it's probably, we're guessing, it's likely a contractual requirement as well.
Or both.
And we don't know if other folks, as part of this deal, are staying on, or if those are terms of the deals. They may be compensated with financially or with equity for doing that sort of thing. But this is in many ways an acqui-hire. And so having someone like Ben Clymer and having the editorial talent of the brand, potentially having some of the other talent of Hodinkee, whether it's people who worked on their online store. So for instance, if you went the model of, Hodinkee becomes a very high-end aspirational advisor group to high-end clients within Watches of Switzerland. Like, there are people at Hodinkee who did that and who have that book of business. Like,
absolutely.
These are people who have real skills, who have real credibility and bring real value just purely as employees to Watches of Switzerland. So I do think there's value there as well.
Yeah. And I mean, look, I don't know anything about the culture of Watches of Switzerland. So that's sort of that's another sort of variable that's floating around. Like, if you have, let's say, 30 new people or however many folks are at Hodinkee right now, come and join the U.S. team at Watches of Switzerland, like, is the culture there one that will be empowering to them, where, they'll be able to really share and help Watches of Switzerland as it evolves, or not? I mean, that's sort of an open variable. There's another side of it too. We at Collective are digital watch retailers. Hodinkee only ever was a digital watch retailer. And while Watches of Switzerland certainly sells watches online, that's not a core component of their business, I have to imagine. So, there is a sort of another open question there too about whether some of the talent and knowledge that's coming from Hodinkee that did spend years on everything from, online watch retailing, advertising, fulfillment, all of that stuff, if that knowledge bank is going to go over to them. Plus, let's not forget, I suspect that they also got the rights to and own the domain for Crown and Caliber. So, like, there is potentially there is potentially an ability, I suspect, for them to resurrect that. And Watches of Switzerland, I don't believe they currently take trades, for example, but that could make a very significant opportunity for Watches of Switzerland if Crown and Caliber came back as a vector for monetizing watches that have been traded in towards the overall business. I'm spitballing here, but I'm just trying to look at, like, all of the assets that Hodinkee had and what that will do for them. The other thing, and I know this sounds ridiculous, but it's not nothing, Hodinkee Magazine is also an asset that was purchased in this. In-store magazines have a long, storied history, and that I fully believe is something that could be sold as also additional advertising opportunity for cooperative marketing to folks.
See, now you're buying into my advertising conspiracy theory.
Yeah, I guess you're right.
But it's gone from conspiracy theory to mainstream.
Well, let me put you this way. Okay.
Mainstream belief.
Here's why I pivot on that a little bit. The digital side of it, I mean, you know this. You sat in these meetings with people before. People, even 25 years into digital marketing, people still view digital marketing in many ways on a lower tier than outdoor or even magazines, which are an industry that's been in a pullback for decades. However, especially when you're talking to a luxury brand saying, I have this beautiful high glossy magazine that's published quarterly or whatever, biannually, whatever they're doing, and you can have the back page. I suspect that brand X would be more willing to dish out, $25K, $40K for that than they would for equivalent, more higher performing and better measured digital media, because that's the way people buy media, whether that's logical or not.
Yeah.
So that's another asset that they bring. And if I'm not mistaken, I do believe Hodinkee still has a lease on a location in Lower Manhattan, which they haven't gotten out of. And if that's the case, that's another physical location, which Watches of Switzerland may or may not choose. I'm not saying that they will.
Interesting.
I'm just saying it is an asset.
I'm not sure they're still in that space, but
I don't know. I mean, but I knew that up until...
It's a few blocks from the Watches of Switzerland Soho anyway.
Yeah, but again, that presumes...
Maybe it becomes a different kind of focus of a store,
right.
Or it could even just become a mono brand boutique for
or an
something
event
else,
space.
or an event space. Who knows?
I'm just trying to look at all of the potential assets that were on the table here and try to give a more circumspect point of view than like they just bought them for the articles.
All right. Speaking of buying things, it's interesting. Watches of Switzerland, as we mentioned, has been on a bit of a buying spree. We mentioned analog shift. By the way, I think another good sign for your question about what the culture is of working at Watches of Switzerland. I mean, James Lambden has now been at Watches of Switzerland for years. He's the founder of analog
Yeah, he's probably
shift.
outside of any like contract that would keep him there.
We don't know. I would presume he's outside of a contract that would keep him there. Usually they're about 42 years, 48 months. Sometimes they can be 5 years, whatever, but he should be outside that window now. And I would imagine, he's friends with Ben. We don't know James personally, but he has an amazing reputation. And presumably one of the first people Ben called when thinking about this deal was James, and probably has a sense of what it's like to work there and be an employee. But on the topic of buying things, as I said, Watches of Switzerland has been on a buying spree. Now, we don't know how much money they paid for Hodinkee and how they came up with that money, whether it was through all cash, whether they financed that cash, or whether this is a all stock or partial stock transaction. But we will find out most likely, because they are a publicly traded company in the UK. We don't exactly know what the disclosures are required, which disclosures are required in the UK on acquisitions like this, but these companies have to open their books. We do know that they acquired Roberto Coin, or at least the US operations of Roberto Coin, which is like a high-end jewelry maker, earlier this year. And that was an all-cash deal for $130 million.
All cash.
All cash. Now, that cash, or $115 million of that cash, financed. So Watches of Switzerland got financing, took out debt to service that, which I think is particularly remarkable given the high interest rate market we are in right now. It's never been more expensive, at least in recent history, to raise money through debt to do these sorts of things.
Although I would suspect Roberto Coin product is at a much higher margin than watches, so it may have been worth it.
I don't know if that's a fair valuation, a high valuation, what the margins are,
Sure.
But that's a lot of money. So suffice it to say, Watches of Switzerland has demonstrated they have the ability to go out and raise over $100 million in cash through financing. So we don't know how this works, but I think it's important to know, like, Watches of Switzerland has demonstrated they are expanding, they are committed to expanding, and they have the ability, even in a difficult market for watches of jewelry, to raise significant amounts of capital. Now, I think the other piece of this that's important, and I want to look at this from two perspectives. The first is maybe a bit more of a cynical perspective. And it's funny, my ears must have been burning. But yesterday I listened to a podcast appearance that Ben Clymer made in 2021 on John Reardon's collectability podcast, which is a great podcast. I'm not hugely myself into Patek Philippe, but I'm trying to educate myself. And if you're curious about Patek Philippe and the history and the business of Patek Philippe, great podcast. John had Ben Clymer on back in 2021. And this was sort of at the height of the current or the previous watch market, the watch bubble, and really at the peak of Hodinkee's powers. They had just acquired Crown and Caliber, which was a deal. I think it was like a $50 million deal, something like that, tens of millions of dollars there. And one of the things Ben mentions is, which I haven't heard him speak publicly about before, the different rounds of investment that Hodinkee had done. And I think he said, again, listen to this pod, you can fact check me on this, but I think it was in 2015, they raised their first round of funding from angel investors. He mentioned John Mayer and Tony Fadell were two of the original investors. We know there were at least one subsequent round that also involved private equity, and in particular, among others, LVMH's sort of venture arm. A venture round, not private equity. We don't know all of the folks and entities that were involved in raising capital for Hodinkee and who owned what, how much anyone owned. But suffice it to say,
what the structure of that was.
We know that they had both angel and institutional investors. And let's take the timeline that Ben laid out, which was 2015. They accepted some of their first significant funding. Some of those investors have had their assets tied up in Hodinkee for nearly 10 years with no access to those funds. And we don't know if Hodinkee was paying them dividends or what. No idea. So most angel investors who are putting, again, their personal fortunes on the line, or some part of their personal fortune on the line, and certainly institutional investors like venture firms who are putting money into businesses, presumably with the idea of making a return, expect at some point to get a return. And this exit gives them that return. Now, whether it's all cash or whether they get stock in Watches of Switzerland, it's a publicly traded company. So you go from having stock in a private company where there's no open market to sell it to a public company where you can presumably hold or sell. That's a big deal. And I think it's easy to say like, oh, Hodinkee sold out, or this was a cash grab or whatever. But and again, we don't need to cry tears for venture capitalists or people who are in a fortunate financial position to be able to invest in a business like Hodinkee. But no one invests in businesses like this without the idea that it's going to, of course, I would assume many people did it because they love watches and they love what Hodinkee was doing, but they put their personal fortune on the line. And this represents an opportunity.
Yeah, they did it to make money.
For them to make a return on that investment. I also think it's worth pointing out, in maybe a less cynical way, that, and I have a question for you about this, stepping back, Ben Clymer created a remarkable brand and a remarkable business, all told. If you told him in 2008, I believe it was, when he started a watch blog called Hodinkee, that it would reach the heights it did in terms of its business and in terms of its cultural relevance and its relevance in the watch community, it might have been unfathomable. And, he built something really powerful. And a lot of times when entrepreneurs, particularly in the online space, build something like this, they do so with an exit in mind. Now, that exit could be it becomes a public company. That exit could be it gets acquired, which in this case has happened. But any form of exit is a major accomplishment for an entrepreneur. And again, we don't know yet how much Watches of Switzerland is paying for this and what portion of Hodinkee Ben still owns, but it's a major accomplishment just purely from an entrepreneurial and a business standpoint. But Asher, this is what I want to ask you. Mm-hmm. Do you think this is the exit that Ben Clymer had in mind?
Well, okay, two things.
And that's a loaded question.
Yeah. Look, and we said this on the last podcast, we said it in other pods, and we've said it, and I will say this forever. It's not just that Ben built the business that he built. It's that he fundamentally changed a multiple 100-year-old industry. He didn't just change watch media. He brought an entire generation of people into the space who started collecting. He changed the way I personally think about collecting. Collective would not exist without a lot of the passion that I got from Hodinkee.
And it wouldn't exist if we didn't have the support of Hodinkee editorially
100%.
on many of our projects.
So anyone out there calling this like a cash grab or like a failure or something like that, I think is frankly grossly misinformed. Now, you can look at it from the cynical point of view and be like, is this like the quote end that he saw? And by the way, I don't think he thinks about this as like the end of Hodinkee. It's the end of perhaps the independent era of Hodinkee.
Yeah, when I say exit, I mean, what is your exit on the business in terms of being acquired or going public, and basically turning, in his case, your sweat equity into some form of what people call in the financial advisory business a liquidity event. I always love that term.
Hodinkee swung for the fences and they whiffed, and that was after multiple home runs for years in a row. And they took the biggest bet that was out there, which was that step into retail and pre-owned watches. And that part of the grand bet of Hodinkee failed. That does not discount every other thing that they accomplished. So you ask me, like, do I think this is the exit that he envisioned? I doubt it, because it's not the business, because the business as he was building it was going to be, was moving in the direction to be a competitor of Watches of Switzerland.
Exactly.
Not a wholly owned subsidiary of Watches of Switzerland. However,
that's kind of what I was getting at.
Yeah. But the flip side of that is everyone who puts every dollar that they have into a business wants to make sure that, and hopes and prays that those dollars will come back to them multiplied. And I suspect in one form or another that has been true over time for Ben and may hopefully be true for him today. Because the one thing that I think anyone on the outside can say is that there is no one who can criticize him for not building something incredible when the vast majority of businesses fail and an even smaller percentage truly succeed and become what this became. So probably a good time for us to wrap this, but I would just say none of us know what's coming with this. It is a profound shift in the industry, and it is further evidence of consolidation, which is a trend we've been seeing now for years in this business. What Watches of Switzerland chooses to do with this brand will be indicative of Ben's potential influence within the company.
Great point.
And Watches of Switzerland's creativity and innovation, or lack thereof. They have something really incredible that they just bought. They can do whatever they want with it. Let's see what they do.
Well, that's as good a place as ever to end this. Thanks so much for listening to Open Work. It's a production of CollectiveHorology.com. You can find us online at CollectiveHorology.com. And to get in touch with your questions, your feedback, whatever, just email podcast@CollectiveHorology.com.